Hello, my name is Darius Kričionis, and today I would like to touch the topic why 99% of startups are failing to get capital from investors. When the startups are having an idea, we're starting to build a pitch deck, and we're going to investors who are being rejected. I've seen a lot of startups who actually went to the market, approached the investors, and we've been rejected. And the reason why we've been rejected just because we didn't do the proper due diligence or let's say homework before we went to the investors. It might be that the initial idea is not good enough for investors, or from another hand, maybe we are targeting not right investors. You need to understand that investors, we have individual strategies. It might be related to geography, it might be related to industry. So basically, you need to understand to whom you should go, and you need to outreach your right investors first. And time to time, I see a lot that majority of the startups will basically approach the wrong investors. So let's say if you are in pre-seed round, and if you will go to the Series A investors, majority of them will reject you, or maybe politely will tell you that it's not really good fit for them. Or you need to keep attention to the idea itself. Have you done the proper validation? Did you check the idea speaking with multiple people? Did you perform your analysis and research in the market? Just to check if that idea can be converted to a sustainable business. At the end of the day, investors, we are not investing only into the idea. We need to see the people who are behind as a team going to perform very well to push this project forward and to make money at the end of the day. So for them, it's critical to understand what kind of market you are targeting, how big is that market, who are your customers. And another thing is that you need to show and explain what is the business model, how are you going to get money into the business, and what are your margins. If they can see that you are targeting the right market, and you can explain that you are building the project which can be sustainable in the long term, you're going to gather a lot of customers. You have a proper and clear business model which allows you to get revenue into the business, and you have pretty good margins, and the cost of a business is quite efficient, then investors might be consider your business. We're a bunch of startups actually who are coming to investors and we are pitching the idea, but that idea may have just only buzzwords around the concept. So you need to be also careful how you present a project, because if you will tell that this is AI project and nothing specific, then it may look like a buzzword, what you are using in your pitch deck, but nothing else. And another thing is what I really would like to tell you that investors were normally very pragmatic people. Those people are actually graduated from Oxford, Harvard universities, and so on. Those people are very smart. And before they make any decisions, we are doing really serious evaluation of your idea. Those people are basically professional business people. So if you will come not prepared, most likely you're going to fail during this meeting with investor. And it's always common sense. You always need to think also as a business person. Why doing this? Why it's important? Who is going to buy this? Why it's going to buy it? How much it's going to cost for the customer? How much is the business going to earn? And basically, is it really needed in the market? If you are confident 100%, then you can try and go to the market. But before even that, I think to spend some time on your own research, it's really important, just because you can see the competitive market. You can analyze the players who are actually offering something similar. If there is a really competitive market, you need to understand how you're going to outstand them. If it's competitive market, it's not necessarily meaning really bad thing. It might be a good thing because there is a market for it, right? Because there is a demand. So basically, this is the reason why many competitors are coming to that marketplace and trying to sell their solutions. But you also need to understand if that market is not oversaturated. And it's so important to make sure that you will not be the last player in the market and you still have some market share, what you can get to your business. Of course, there is a saying that you can do the same business what others do, but you can do it better. So this is the way how we're going to get the customers, by offering something better comparing with your competitors. But you also need to understand how many competitors there are in the market. If you are competing with one or two companies in the market with your niche idea, it might be good, project for you to start working on. But if you will see that your service or product will be just another product from 100 others, it's really challenging to compete. So when you come to the investors, and if this is the case, investors normally can see it straightforward. In 1 week, we may even have 20 calls, 30 calls a week with the startups. We most likely seen similar deals like yours. So you need to do your proper due diligence and research before you go to the investors. We want to grow our YouTube channel and subscribers and followers and people who are joining us. It's really important for us. If you would like to see more content like this, We want to continue to create more content for you. And in the future, we're going to bring founders who will be sharing this. We also going to share with you, and many more people and guests will come. So please follow us, subscribe, and join us.